Hello, it's Friday afternoon in Sydney, and so it's time for Friday Beers with Mark and Stuart. I'm Stuart Roberts.
I'm Mark Ennis.
And we're the founders of Pitt Street Research, Australia's leading provider of issuer-sponsored equity research focused on small and cap companies traded on the Australian Stock Exchange. Mark, it's been an interesting week. ResMed got slaughtered.
Absolutely, yeah. I saw the share price was down, how much? 25%?
When I last I checked, it was just over 20%. Now, I've been following ResMed since about 2006, and these opportunities come along about once a year. My company reports once a quarter. It'll miss its numbers by a slight amount compared to analyst expectations, and suddenly all hell breaks loose on the stock. And this is one of those.
If you look at the chart, though, long-term trend is still very much intact.
Absolutely.
Over a period of 5 to 10 years.
Yeah. Right. And there's no surprise there. About 20% of the US adult population has obstructive sleep apnea. ResMed's the leading provider of equipment to treat that disease condition.
Right.
Why are people so scared? Well, I looked into it, and this is interesting. Never bet against the management of ResMed, in my experience, in terms of their ability to look over the horizon and see what's coming. Right. Now, it's getting easier and easier to treat obstructive sleep apnea. So you may have seen this. It's a product called Mute from a Melbourne-based company called Rhino. Little nasal implant. Can help blunt a lot of people with probably mild to moderate.
Yeah, used by cyclists as well, I think.
That's exactly right. It's got multiple usages in terms of just improving airflow. Is it a competitor to ResMed to put them out of business? Maybe, maybe not. What I'm seeing is ResMed have gone heavily into the software side of things. In the future, the hardware to treat sleep apnea is probably going to be less important. But a couple of years ago, they laid down their chips in a big way on a company called Brightree, paid about $800 million for it. And the fruits of that is that the stock was down because they were perceived not to have sold as much of software as a service.
Right.
Now, you know and I know that software as a service is very much a future-oriented business with a lot of growth in it. There's just one of those hiccups you get.
So if that's the key reason for the decline, what's basically the bottom line for investors?
I mean, the bottom line is this business is still growing pretty strongly. When the dust clears on this current route, could be worth taking a look at.
Yeah, for sure. So another thing that caught my eye this week was a report on IPOs in 2018.
Right.
It's not all hallelujah because actually on average they're down about 18%.
Right.
So what's your take on that?
Yeah, I think that with a lot of IPOs, the emphasis is on getting the stock on the boards. And let's face it, it's a pretty complicated exercise, listing a public company. It's 6 months of your life, where if you're a CEO, you do very little except think about taking a company public. Not enough work, I think, gets done on looking at the aftermarket for the stock.
Yeah.
Now, frankly,
do you think investors, when they actually invest in these IPOs, really understand the company?
Right. And look, I don't think so. I mean, you get a lot of information in the prospectus, and a lot of that will be boilerplate, for example. It's a lot to search through. What they need is reports from companies like us, where we take a good independent look at the company, and then give investors something to get their teeth around.
Absolutely. One IPO that did really well, that just hit the boards this week, was Splitit.
Right.
So it was up. I think it was up more than 90% on day one.
Right.
Then another 60% on day two. Right. It's done really well. And I guess part of the reason for that is it's comparable to Afterpay.
Right.
The way they operate is a bit different from Afterpay in terms of there's no loan book with Splitit.
But Afterpay's pioneered the market for what Splitit are trying to achieve, right?
Yeah, I think so. And that's valued at, what is it, 1.5 billion?
Right.
By now.
Yeah.
So Splitit is, I guess, sort of going, trying to follow in its footsteps.
Right. And another good Israeli addition to our ASX as well.
Yeah. It's originated out of Israel. And of course, some viewers may know we've got quite a few companies on our books out of Israel.
Right.
And we spent some time there last month, actually.
Yes.
And it was the second time there, but I was still surprised by sort of the dynamics of the market, not just for technology in this case, but also for life sciences, for instance.
So good rule of thumb for 2018 or 19, watch what's coming out of Israel, because there could be some good stuff there.
Sure, yeah, for sure. Take it from where you maybe not diss the brokers too much, because we work with them as well.
Okay. Staying in the technology space, you're the tech expert here, but I made a big effort to try and catch up with you the other night. When I attended an event called The Future of Blockchain. And frankly, I now understand what it's like for lay investors to go to a biotech presentation.
Welcome to my world.
Yeah, I get what monoclonal antibodies are, but everyone else is at sea. Yeah. Now, that's how I felt listening to all this stuff about tokens and all the other stuff in blockchain. So, what the heck is blockchain, and is it good for anything other than a brief punt on some cryptocurrency?
So it's quite complicated from a technology point of view. So we'll keep it really simple. Basically, blockchain is a way to record ownership of all sorts of assets in a way that it can be it's irrefutable. It can be undone. And it's there for everyone to see. The history of ownership of a specific asset. It could be cryptocurrency, but it could be shares.
Okay.
ASX is working on this. It could be cars, could be houses.
For instance, a crate of beer, for example, we could, if it was a valuable beer, we could register ownership and trade it back and forth that way.
Trademarks.
Right? Okay.
You can register that on a blockchain.
Okay.
So that's one thing you can do with it. If you take it a step further, you can create smart contracts on blockchain technology. Right. And that's, I think, where it gets really interesting. And just to give an example, smart contracts are basically programs that execute themselves when certain parameters have been met.
Okay.
Just an example, let's say a sea freight container ships from China to Europe.
Yep.
Makes a few stops along the way.
Okay.
And as soon as container XYZ is offloaded and goes through customs, a smart contract will notice this and will automatically pay the supplier in China.
Okay.
Stuff like that.
Okay, so the efficiency gains are potentially huge.
Huge.
How do investors here make a buck out of that?
Well, there's a number of companies listed on the ASX that are working to integrate blockchain into their own products, like Lineus for video ownership.
Right.
So to counter piracy.
Right.
Yoji and in the logistics side of things. So they're working on the last mile delivery, which is basically going from local warehouses to basically to your house to deliver something.
Okay.
You can use blockchain for that as well. Security Matters, which listed a couple of weeks ago, does something similar but for supply chains. So they can guarantee integrity of supply chains by using blockchain technology. So it can say, this strawberry, good example last year, right? With the fraud there. And They can track, where shipments go, who's handled it, if it's been stored at the right temperature, all that sort of stuff can be recorded, and you can use blockchain for that. Forget cryptocurrency. That's it's fun for the punters, but it's nothing to do. There's no fundamental driver of the value of a Bitcoin.
Okay.
Unless other than people trying to get money out of Greece or Cyprus or China during times of crisis.
That's pretty valuable, I got to tell you.
Yeah, you're experiencing this. But blockchain is the basic technology. Cryptocurrencies is just one application area.
Okay.
But the other stuff is much more interesting.
So basically, us forward-oriented investors ignore blockchain at our peril.
Absolutely.
Okay.
Yeah. So something else that happened this week, we got our first fan mail.
Right.
Just after 2 episodes of Friday Beers.
Okay, yeah.
Market Stewart. So 2 guys from the US. They've been following us since the first episode.
Right.
They're quite happy with what we're doing. And they had a question, though, if there is any way for them to benefit from the Royal Commission on Aged Care.
Right.
And while we, if you have any thoughts on that, talk about that, and we'll put up a picture of these guys because they send a photo along as well.
Yeah. So our friends in the US are quite insightful. So they've realised there's going to be a big shake-up of the aged care sector in Australia. Well, one of the companies we did some work on recently is PainCheck. PainCheck have the world's first digital tool for assessing pain.
Right.
Just a scan of the face, and there are certain recognisable facial muscles which will indicate if a person's in pain.
Right. So this is for specific demographics for people that can't talk. Or...
If you can't talk, if you're an infant or an elderly person with dementia, this is perfect to be able to assess pain.
Yeah, absolutely.
Now, half of the folks who live in aged care facilities here in Australia, and it's probably the same around the world, will have dementia of some sort.
Yeah.
Will therefore be unable to say if they've got pain.
And this app solves that problem.
This app solves that problem. Wow. A huge productivity tool. And it's fair to say that in an environment where aged care operators want to improve their record, given what's going to come out in the Royal Commission, that PainCheck can look for some pretty strong uptake in that sector.
So our friends in America should have a look at this company.
Absolutely, they should.
All right. Which brings us to our last topic for the day. This tastes really good. It's,
right.
But I'm guessing you know all the ins and outs of this one.
Right. Mornington Pale. This is a beer from down south, Mornington Peninsula. In fact, it's in the town of Mornington, which is about 70 kilometres south of Melbourne. Pretty good American pale ale. Relatively light colour. If you toss it out here, it's got a nice head, and that's probably a pretty low colour on the colour scale. Can't tell what the bittering is, but I'm guessing the IBU is probably in the 30s. But yeah, it's a good American pale ale, and it's fair to say Australian drinkers are still discovering American pale. They're not so strong on the hop scale. But this one, I think, has a nice feel in terms of the palate and so forth. So I think it'll make a big step forward in helping Australian drinkers to like American pale ale. So you can get this one at the local bottle shop next to your supermarket. It's not a hike you have to go to Dan Murphy's, but I think it's good everyday drinking if you like American pale, or if you don't want to explore it, check it out.
Excellent. Thanks for that explanation.
That's about all the time we have time for. Thanks for watching, and good luck, investors, next week.
See you next week. Bye.